please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. Ashwani Gujral, Mitesh Thakkar and Prakash Gaba now join us. SGX Nifty is indicating it's cut its losses, but it's indicating that we'll have a slight downward bias when we start. Good morning, Ashwani. Yesterday you were telling us that you are interested in buying the previous day's low and selling the previous day's high. That is your basic trade. Is that how you'll approach the index today?
Well, good morning. And yesterday, Bank Nifty got hammered for whatever reasons. And today we are looking at a gap down. So if we are not able to show follow through below yesterday's lows, which is about 28,020 on the Bank Nifty and possibly, 11,560 thereabouts on the Nifty futures, then that should set up a nice intraday pullback at least, because we are dealing with a market that is sideways. So from that perspective, if you don't get follow through post the open, then there will be a lot of short covering, provided the world does not misbehave, because nothing incrementally has gone wrong overnight. So that should be your first trade. Whatever happens after that, at least one big 150 point intraday rally on Bank Nifty is likely. Similarly, Nifty anyway is performing well during this correction. So chances are that post the gap down, even Nifty should move beyond, say, 11,600.
Okay, point taken. Well, let's ask Mitesh what's his first trade. Good morning, Mitesh. Would you agree, Nifty, Bank Nifty buy on dips?
Yes, I think both the indices are now showing more signs of consolidation, with the intraday indicators still coming down. So I think we might have a range of about 11,500, give and take 10-20 points on the downside, to about 11,630 on the upside. So in that sense, I think anything close to 11,530, 540 would be a good buying zone on the Nifty. Similarly, the Bank Nifty looks like ranging between 27,800 and about 27,350. So closer to about 27,800, I think longs can be attempted. So it does look like, yes, buying on dips will work, but broadly, I don't see indices running away immediately. I think some consolidation will happen, so you might have to be nimble in taking profits as well.
So some consolidation, but a buy on dips. I mean, if you look at the movement this week, the Nifty is up almost about 1% for the week. The mid-caps have also moved in tandem, about 0.8% higher. Prakash Gaba is also with us. Prakash, hi, good morning. You expect this uptrend to continue today as well?
Good morning, Sonia. I don't think so.
Okay.
Well, so far trend is still intact up and has not been compromised. The problem is it's a very narrow band. It needs a breakout. It needs a breakout to maybe beyond 11,600 or 11,500 with the trigger factors. Will we see a breakout? I don't think so. Because if breakout has to come on the upside, then the banks will have to support. Are banks supporting? The answer is no. Bank, in fact, has a resistance around 200 points, 150 points up. So I don't, and the support is deep within down. If that is the case, the bank is a weak. I don't think that will help Nifty. So I don't think Nifty is going up. Nifty may be slightly sluggish. It depends where does the trade go. With no idea where it is going, the sluggishness and bias is down. Best is to be stock specific. That's all.
Okay, that's interesting. Let's talk stocks. Before that, Ashwani, so that's your base trade to look for intraday bounce at yesterday's low. If that trade does not work, do you reckon a fresh downside could start? Thoughts on that, and also your stop calls?
See, that obviously your stop is yesterday's low, but the feeling that you get is not of a collapse. If the Nifty is making fresh lifetime highs, you can't get a collapse on the Bank Nifty beyond a point. So the sense is that it's a consolidation. A collapse needs 800 decliners to 200 advancers. The market breadth is fine. Mid caps are okay. It is just a sector specific problem with the banks, and hence they are also broadly sideways. They'll find some good news to go higher. So play it like a sideways market. Don't think this is some big downtrend which is starting out. Having said that, Exide is a buy with a stop of 296, target of 312. Colgate Palmolive is a buy with a stop of 1175, target of 1230. Pidilite Industries a buy with a stop of 1150, target of 1185. Canfin Homes is a sell with a stop of 335, target of 320. And JSPL is a sell with a stop of 205, target of 190.
Okay, so you're selling one financial. Mitesh is selling two of them. Go ahead, Mitesh.
I have two sells to about three buys, and HCL Tech, I think, was a recommendation earlier as well, but even at current levels, the pattern looks like there will be continuation on the upside. So buy with a stop at 1008, look for 1060 as the target. On the sell side, Indian Bank, the indicator setup is turning negative, so keep a stop at 339.5, look for declines to about levels of 322. Repco Home, after the numbers, the stock has gone into mild downtrend and the indicator setup is turning weak, so sell with a stop at 593, look for targets of 560. And two more buy calls, one of them is Bharat Forge, buy with a stop at 640, look for targets of 675. And NTPC comes to a trading list after a long time. Good price and volume breakout yesterday. So buy with a stop at 160 for targets of 172.
Okay, and Prakash, what about you? What would your stock list be today?
Yeah, I see the market slightly sluggish, yet I don't have a single sell and none in the bank setting. I like all four buys here. I'll start with Ashok Leyland. That looks good to me. I've seen a good up move yesterday and should continue up. Dips can be bought. Target on the upside is 137. Stop below 130 should be fine. I too like HCL Tech, seen a good up move. The weekly chart pattern is good, so is the daily and so is intraday. I think it's heading up to levels closer to 1040 zones, stop below 1016. I have Maruti. Maruti I like the base formation, looks like there's not much downside. Upside could continue from here. Target on the upside is 9365, stop below 9150. And finally I have Pidilite. Seen a good up move in the last 1 hour trading session. Looking good, can climb to levels closer to 1190, 1200 zones, stop below 1150.
Okay, so Pidilite is emerging as a kind of an all-time favorite. Well, with that, thank you, gentlemen. We are going to come back to you with lots more questions. But let's get the first corporate guest of the morning. The United States imposed preliminary anti-dumping duties over 50% on metal pipes made in India. The impacted industry had an import value of nearly $300 million last year. Vipul Mathur, the Managing Director and CEO of Welspun Corp, joins us on the phone line, but incidentally not as a casualty but as a beneficiary. Mr. Mathur, good morning to you. I understand that you have capacity in the United States itself, so you will be the beneficiary of this anti-dumping duty?
Very good morning. Well, we wear two hats, right? And when we wear an Indian hat, these duties are extremely prohibitive. We have seen duties, the countervailing duties coming back a month back, and then topped up by this anti-dumping duty. So all put together, anything which has to go out from India now attracts a duty more than 600%. So to that extent, these are very prohibitive and harming. But having said that, we also being a local manufacturer in America, and to that extent, they are extremely beneficial for us.
Okay, so what is the percentage of your capacity in the United States compared to the overall capacity?
So we have close to more than 500,000 tons. We have two plants there. One is a large diameter plant, which has a capacity of more than 350,000 tons. And again, we have a small diameter plant, which has a capacity in excess of 200,000 tons. So all put together, we have more than 500,000 tons of a pipe manufacturing capacity in America, and which is probably one of the largest capacity. And we, in any case, we are the leaders of pipe manufacturing in the United States or in the North American market in any case.
So what is the capacity utilization currently, and how much do you think it can go up to, say, over the next couple of years in the United States?
So at this point of time, this year has started on a good note, so we would see a very high capacity utilization. It could be in the vicinity of some 80-85%, if not more. And that is what seems to be the trend for the next coming years, 1 or 2 years for sure, because the amount of upsurge we have seen in the oil and gas industry in the U.S. is very, very encouraging. And this is all being through the Permian gas and the shale gas, which is or oil, which is happening there, which is driving the whole dynamics. And we being there as a local manufacturer, we being on absolutely at the hub of the development, we are seeing a lot of positive upswing towards that.
Have you bagged any large orders in the US lately, and what would the quantum look like?
So we have been, receiving orders intermittently, and at this point of time, as we speak, we are almost booked till to the early part of the first quarter of the next year. So almost 8 to 9 months of an order book we already have. Recently, we have bagged an order from an energy infrastructure company, which is a very large energy infrastructure company, and whom we have been a regular customer. We have been regularly supplying to them. And they have come back with a project, and we have been very closely working with them. So we recently bagged one small order from them as well.
Okay, how much is the capacity outside the US? And as a result of this huge anti-dumping duty imposed on imports into US, does it become negative? Are prices depressed outside the US? For instance, you export to the MENA countries, the Middle Eastern countries. Over there, are you suffering lower prices because, those who can't go to the US are coming there?
Not really. If you look at it, you raise a good question, MENA. So MENA is another place where, Welspun has a very high presence by virtue of A, proximity to India, and B, by having our investment in Saudi Arabia itself. So we are one of the largest line pipe producers in the kingdom. So to that extent, we are not getting impacted. Overall, if you see, all the markets are now becoming more or less localized. They are getting domesticated, and in all the three large oil-producing economies, which is America, Saudi, and India, we are a local. We have our manufacturing setup, and we are present there. So,
will the Saudi Arabian JV turn into the black? I mean, when can we expect it to report profits?
Yeah, well, we are, as you know, we have some challenges there because of the economy out there. That's, now we are sitting with a very, very healthy order book around that. We are almost close to $1 million ton of a pipe order book in that market. And as we progress, I think the pain is only for a few more quarters, and thereafter, I think it will be all good out there.
Okay, can you just give us an idea of a consolidated EBITDA and EBITDA for the current year? How much may you end at? I think the first quarter, your consolidated EBITDA was 158 crores. Will that be the quarterly run rate?
It is. See, as you know, we are into a project business, and it all depends what is the mix of the projects, what you are getting executed in that particular quarter. But I think it is going to be far better than that in times to come. Okay, all the three subsequent quarters are going to show much better improvement. Than
much better is what, 200 crores then? Quarterly run rate.
Let's look at it. The second quarter is not so very far away, but yeah, I'm pretty sure it should be close to comparison.
Okay, thank you very much, Vipul Mathur, for joining us with your new orders and the position in the United States. We take a quick break. We're coming back with experts who will analyze stocks for us. Sanjeev Bhasin of IIFL first with some long-term stock picks. Welcome back. It's time to discuss some more stocks, and Sanjeev Bhasin of IIFL is with us. Sanjeev, we have information that Amitav Chaudhary is the next guy in Axis. This is something the market is slowly discounting. What's your sense now? Axis has already run up a goodish bit. Would you still buy it?
Yeah, morning. So Lata, if you see that both Axis and ICI actually suffered with the realm of leadership not being changed, and that led to a drag, whatever said, and I'm not doubting the abilities, but there was a lot of controversy. And this new realm change may be a fresh breath of infusion of strength. And we've seen that corporate lenders have actually cleansed their books over the past few quarters. So yes, if you are going to see credit expand on the corporate side, on the revamped in capex expansion and so on, I think Axis and ICICI fit the bill. The stocks have run up very sharply. We think the markets may be looking a tad overbought, but on declines, definitely we think corporate lenders are going to do very well for the remaining part of the year.
Okay, corporate lenders going to do very well. Sanjeev, hi, good morning. This week, one of the stocks of the week has been L&T because of that buyback, the 9,000 crore share sale. What are you forecasting for L&T? Do you see more returns for an investor, and does it make sense to buy more at this level?
Yeah, morning. So, Sonia, as a disclosure, L&T has been one of our stock picks at 11,500 before the news of the buyback, which has only strengthened our belief. A corporate manufacturing sector player with a huge impetus on expansion in the private capex is putting his money where his mouth is and telling you that the stock is underpriced. And this is a very good precedent which sets for corporates, which is followed very much in the US, that there can be multiple buybacks over a period of extended period of the next 3-5 years, whenever the corporates feel that stock is undervalued, they can use their cash. And I think L&T has set a precedent. It's the first time I've seen a manufacturing capex stock coming back with a view that their stock is undervalued. And I think L&T fits the bill perfectly for at least a 20% upside in the large caps, even from this level. So we are reinforcing our buy levels, and we think any decline again should be an opportunity to accumulate.
Okay. We're getting increasingly good news on the pharmaceutical front. They may not be massive, but incrementally more drugs are getting US FDA approval. More plants like Halol and Srikakulam are getting positive ticks from the US drug regulator. How much more can you buy the pharma companies? Is it a run that's just begun? What's your list?
Yeah, so Lata, actually, if you look back around a year back, we've been contrarian on pharma, and it has been painful. But now we are reaping the benefits. I think I can clearly thumb the table. Pharma will be the sector of 2019. I am looking for a 25% upside, 750 on Sun, 3,000 on Dr. Reddy, 1,100 on Lupin. I mean, I can go on. All I'm saying is these are under-owned. They will be the same hiatus which you saw in IT. And if you do want to play the weak rupee, look to book profit in IT and get into pharma. So ITC, Sun Pharma and Ultratech were three untouchables, because of pessimism on cement pricing at 36.50. Sun was doing nothing because of Halol, and ITC was a laggard at 260. These three stocks have been the outperforming index leaders in this rally. And this rally clearly belongs to pharma, and I think there is room to go on the upside.
Okay, so the rally belongs to pharma. That's quite a bold call. I mean, considering that we've already seen, about 11, 12, 15% moves this month. Sanjeev, what would you do with stocks that have a European exposure? I mean, yesterday we saw Continental AG, the global component maker, scale down its 2018 revenue guidance. Companies like Motherson Sumi, Tata Motors, would you buy any? I mean, Tata Motors, of course, has problems of its own, but what about something like Motherson Sumi?
Correct. So I think there will be a tad bit of weakness because of the euro and some of the exposure. But on Tata Motor, I'll be slightly contrarian. Sonia, if I heard correctly last week, I was hearing a summary on Tesla and Elon Musk and why the extremely high pricing of Tesla may not last, because JLR and Toyota are sending their first tranche of EVs now exporting to the US. They have a huge presence in Europe. And I think that could be the game changer. If they really do get a huge foothold in the market over a period of time, then the next wave can be electric vehicles. And Tata Motor has been suffering from a high base effect. Their local sales are showing extreme strength on the CV side. And for me, I think the risk reward at 250 is suitable, that electric vehicles could be the game changer for their advent into the US. So that would be a slight contrarian play. I would say that you could look for at least 320 levels in the next 1 year if all this plays out according to plan. But on the others, Motherson Sumi has been one of the best OEM plays. I would rather shift to a stock called Suprajit Engineering, which is gaining market share on the halogen side after the merger of Phoenix Mill, and also their market share in the cable market is expanding both on the two-wheeler and on the auto side.
Okay. Well, just coming to you with a few more questions, Sanjeev. We want to put some FNOQs as well on the table, and Chandan Taparia of Motilal Oswal has joined us for that. Good morning, Chandan. What are you trading today?
Yes, looking at the market yesterday, we have seen the buying interest in Nifty to continue, but selective banking stocks started to witness some selling pressure. Looking at the Nifty, the maximum put open interest, which was earlier at 11,000, shifted to 11,300 and now at 11,500. Call open interest shifted to 11,600. So the supports could continue to remain intact in the Nifty per se, and selective heavyweights are likely to do well to catch the momentum really. So first trade is buy on IT sector, that is buy on TCS. We are positive on most of the IT stocks. but recommending to go long on TCS. The stock has given a breakout from its consolidation phase. We are witnessing put writing activity. The stock is trading at recent lifetime highs. Longs are intact, and it seems that it is all set to head towards buyback price of 2080-2100 zone. So recommending to buy with a stop loss of 2000 and expecting it to move towards 2090 kind of level. We have seen put writing and call unwinding also support our positive stance on the counter. Second trade is buy on Pidilite. We have seen the strong momentum in Nifty, FMCG PEC, Dabur, Marico, HUL, ITC, Pidilite all seems positive. We have seen built up of long position in Pidilite. The stock has been making higher tops, higher bottom formation. Longs are seen. Rollover started to build into the stock. So recommending with the stop loss of 1140, and this stock has potential to move towards 1205 kind of level. Third trade, that is again the heavyweights counter, Reliance Industry. Maximum call OI commands at 1300 strike, and all the at the money or slightly in the money put are witnessing the huge writing activity. We have seen put writing even at 1220, 1240, 1260 strike, which indicates that stock is all set to head towards the high territory. Overall longs are intact. Stock is trading higher than its volume weighted average, up by around 14% in this series. So towards the expiry, some short covering and the further momentum cannot be ruled out. So one can trade with 1260 call, buy this call near to 16 rupees, put a stop loss of 10, and this call can move towards 28 rupees on the higher side.
Okay, thanks a lot for that, Chandan. You have a good weekend. We'll touch base with you next week. We'll take a short break on that note, but coming up on the other side, SP Tulsian will join in to discuss all of the stocks in the news, and we'll have the pre-opening rates with us as well.